Good morning, good afternoon, good evening, ladies and gentlemen, wherever you are in the world. This presentation is from Pipoholics, and we are based in London, England. A little bit of background information on me. I've been a forex trader since around 2010. Currently trade the forex market as a full-time occupation. I'm the author of the international selling book Investment, Economics and Risk. And after getting a degree in economics and maths, I have studied risk at master's degree level. It will be my pleasure to take you through this opportunity that we've spotted in forex markets. If you would like similar setups to the one that you're about to see, then please follow us on Facebook, Twitter, Instagram, and subscribe to our YouTube channel, as sometimes what we do in the week is we will post updates on these trades. Our second trade presentation will feature another euro currency pair. This time it's the euro New Zealand dollar. And there's some things that we think are going to push the euro down against the New Zealand dollar. Now, I know a lot of you might be cautious of shorting the euro based on its strength, but one thing I would say is that in 2017, the New Zealand dollar fell to the bottom of the G10 currency league table, and we think that a correction is due. And this is possibly part of that correction. And we've got some technical reasons as to why we might want to sell this market. So this is the monthly chart, and you can see that we've drawn a few trend lines of important prices. And the market has U-turned off of this trend line a few times. Once it was underneath it, found resistance, come close, found resistance, again resistance. We're back at that price, and last month was a bearish candle. If we go to the daily chart, because at the moment things are looking like we could get a down movement on this market. The market was in a nice uptrend, higher highs, higher lows. But it looks to me like we're putting in a head and shoulder. You see the left shoulder, the head and the right shoulder. Market broke below a neckline and it's come back to back test it. For those of you that are not familiar with head and shoulders, they basically signify the turning point where the market is making higher highs, higher lows, higher high, higher low, lower high, lower low, should get a lower high and then another lower low. So we have a target of around 1.619-ish on this position, and it could well get down to 1.55. So there's a lot of downside movement on this market. What we would say is that this area here will probably be an area where there are a lot of stop losses on short trades. So if the market breaches the 1.707 level, you might want to get out of the market, because it may mean that the market does want to go higher for whatever reason. But at the current pricing, we are at a high price, so we want to sell at high points. This is a high point. It's back testing this neckline, so that will be a resistance. It also has this descending resistance, and the market is pretty much there. So what I think we need to do is look for selling opportunities in the hourly chart, because the daily is at a high price and it could well go to a lower low. So we're very interested in selling. If we look at the hourly chart, for those of you that watched our US dollar, Japanese yen setup last week, we've got a very, very similar setup. We do not want to go jumping into this market yet, because the immediate trend is up and we're also at a high price at the moment, but we need the market to break this ascending support line. All the time the market is above that ascending support line, it could break resistance. We don't know. We have to let the market show us what it wants to do. If the market rallies a little bit and gets under this line, then it has confirmed to us that we are ready to sell. And then all we need to do is find a high price in this sell zone. What do I mean by the sell zone? If the market breaches this bullish support, then we would say it's ready to sell, but we cannot sell the market when it's at a low price, so we need a high price. So if the market breaks down, puts in a low price, rallies, puts in a high price, we will sell a counter trend line break on the downside. And I've already mentioned where the targets are on this market. We think immediate targets would be around the 1.62 level, and if that doesn't hold, then you will see at some point 1.55. Those are the main areas of support. We think that this market will go lower, and we are looking for selling opportunities on Monday and Tuesday of next week.